Hi, welcome to Maker's Bar. I'm Akshita Shetty. Today we have Neo Tax. Neo Tax is on a mission to make tax season less taxing. Neo Tax believes that taxes can be a strategic advantage for businesses of all sizes, just not the wealthy corporations. The company helps startups capture R&D tax credits so that they can focus on building and innovating. Today I have Cailen Dsa, who's a COO of Neo Tax, with us. Welcome, Cailen.
Thank you so much for having me, Akshata. I appreciate it.
Thank you so much for coming as well. And I'm really excited about this podcast because I feel like we are evangelizing and educating some of the folks who listen to me. So, Cailen, tell me a little bit about your early career. And you obviously have an amazing profile, and you've done so many different things in your career. And when I look at you, I feel so proud for somebody who's from the same university as I am. So tell me, how you got started, and you've had from what I've learned a little bit about you, you've had a diverse background, right? Like living in Africa and then in Canada. So that's why, the diversity in your career is like very shown. So tell me a little bit about your early career and how you start doing all of this that you're doing right now.
Yeah. I'll try to keep it short because it's like, I always like to overshare and unpack. There's so many like unique things that have shaped my career and my life and all of that. So the abridged version is that my parents, my dad's an entrepreneur. My parents have moved around a lot all over the world. I was originally born in Canada. The thing that brought me to the United States actually was my dad was he left big tech and went to go down the entrepreneurial journey, and relocated to Cupertino, and then eventually we followed suit. And so like just growing up in Cupertino, obviously you grew up in, kind of like the shadow of, you see Apple. This is circa, I'd say like, 1994, 1995. This is before the iPod. This is when Steve Jobs was at Apple and got ousted and then came back. This is when Apple was bankrupt. So just like being around that and growing up in that school system, and a lot of people's friends worked in tech. At that time, it was the hardware era. I think we're back in the hardware era now with AI. With NVIDIA and other hardware companies in the semiconductor space. But like obviously influence from my father was a big thing. Just seeing him travel a lot, and when we did bring your dad to school day, bring your parent to school day. He would come and talk about what he did running business at a really hot company in the 90s. I also have an older brother who's, we'll get into this, I think maybe, who's a mentor to me. And he's a software engineer. He ended up going to work for Twitter very early as the first like 30, 40 employees. He also was in the third ever batch of Y Combinator back in 2005. And so when you have an older brother who's, very successful, you have this sibling, and especially a brother, you have these brotherly rivalry where like we want to one up each other. And it's always been that way. We've always been in competition since we were young. And so coming out of college, my dad and brother both implored me to go and work for early stage tech. Back then it was Web 2.0 back in 2007. And so I looked at a bunch of different companies and oddly ended up applying for a job on Craigslist, which is the way companies actually advertise jobs back then. And ended up meeting this founder who was the same age as me, who was a college dropout. It just kind of blew my mind because I was like, how is this like guy who's the same age as me started this company, raised, $3-4 million in funding. Ended up becoming Box, which is now a $4 billion public company. I think, very close or north of $1 billion in revenue.
Oh, yeah. So you met Aaron.
Aaron Levy. Yes. I met Aaron Levy very, very early on. And I think that what ended up kind of shaping the rest of my career, I caught the bug of startups. And then from there, I ended up, joining Dropbox very early, which is, technically their competitor. I was there at Dropbox for almost 6 years in numerous roles, not just in go-to-market. I was at Box for 3 years. I joined both companies when there were less than 20 employees. So I got kind of a mini MBA on how do you build a company. Like oftentimes
Yeah.
the market, when you joined, the marketing org didn't exist, or the finance org didn't exist, or we didn't have design or product. And so you get a chance to see how do you like essentially will your way to product market fit. And so since then, I've worked for companies like Front, Revenue Cat, TrueWork, which is a fintech company. And then, I've advised a bunch of different companies, and then, this all led me to this culmination of my COO role at Neo Tax, where I look after all of our teams outside of engineering and product.
Yeah. So I think it's an amazing journey, and it's interesting that you met Aaron. I remember when Aaron started Box, I think I was probably in business school, and I was looking at him like, how's this kid starting this company? I had the same, in fact, he went to USC, so I had the same thought process as you did. So I'm not surprised at all.
Actually, you guys both went to USC, so very, very impressive entrepreneur.
Yeah, very, very impressive. Yeah, I totally agree. So tell us, what does Neo Tax do, right? I'm very impressed by what you guys do, and I accidentally found you guys, and I was doing research on tax credit and R&D tax credit for one of the startups that I was advising, and I said, you know what, let me check what companies are out there, and then I found your company, and that's how we are here, right? So tell me a little bit what you guys do, and I think you guys obviously are evangelizing, and you need to evangelize more about what you guys are doing so that others are aware.
Well, I'm glad that you found us. I don't know how you found us, but we have no marketers at the company, which I think is a badge of honor. We spend zero money on paid acquisition. It's all word of mouth and just happy customers who have high NPS and want to refer us to other people because they have a good experience, which is the best type of channel you could ever have. So Neo Tax, we at a high level, we build a product for SMBs all the way through enterprise. On the SMB side, we have a product that using AI that fully automates your R&D tax credit, which is IRS Section 41, where if you have less than 5 million in revenue, less than 5 years of revenue history, and you pay you're based in the US and pay taxes to the IRS, you qualify for something called the payroll credit, where you can get up to 250K this year. Next year, that limit's going to be lifted up to 500K in payroll tax offsets, which is free capital for startups. So if you're doing any sort of R&D in the US, building new products, high likelihood you can get some money back for the government as an incentive to do R&D here in this country, and essentially create IP in this country. And then we've recently, in the last year, launched new products for income credits for larger companies once they graduate out of the payroll credit. We also built a product for Section 174, which is this new, pretty punitive, very controversial tax change that happened this year, where you have to capitalize or amortize R&D between 5 and 15 years if you do domestic or foreign. Which is causing startups who would otherwise not have a tax bill in previous years to now have a tax bill. So we provide software and solutions for that. And then we also have a new product, and all this is powered by AI, to automate something called ASC 35040, which is the capitalization of internal use software for GAAP financials for a company. So these are all things that typically your big 4 accounting firm will do, like a PwC or Deloitte or KPMG, or maybe you're using a boutique. Companies pay hundreds, if not millions of dollars to these firms in billable hours to handle this, all via manual through spreadsheets and interviews and phone calls. And we do all of this through connecting to all your systems of record that engineering and your R&D team works on. And then we use AI to automatically curate, categorize, and label data. And then we provide R&D studies. We provide the output and exports that you can use to push back into your general ledger, all of these things. And this is something that sometimes takes company months. We can trim that down to a couple days, and it's almost fully 99% automated. So
got it. So I'm going to double click a little bit on that. And you said companies with 5 million in revenue or less, right? What about the valuation? Because generally, you come out of Y Combinator, as we spoke earlier, and you have a valuation of 10 million, right? So it's revenue. It's specifically revenue, right?
Revenue, not valuation.
Yeah. Okay. That's good to know. So tell me, this is, I was just explaining this to the founders that I'm working with. And I said, this is very legal. there's nothing wrong with this. The government is giving you incentives to do this, right? It's a really big deal because obviously the US wants R&D, as much R&D as possible for it to happen over here, right?
Yes.
So how, like, I'm sure you explaining this to people, you found it challenging, and you said that you don't do any. You don't do much marketing, and most of it is organic. All your clients are all organic, but still, like, there would be challenges that you'd face to put this product out there and explain to people and say that, hey, this is all legal, this is perfectly fine to do this. How do you guys, I mean, is that one of the challenges, or you have other challenges as well in the business?
We have many challenges every day. That's the life of we're only 22 people, so we have challenges every single day. Like, I had to let people know Labor Day is this coming weekend, and so like, people forget, like, things of that sort, making sure people are taking time off and decompressing from the stress of work. So this is a very known thing. If you go to irs.gov, you can search up Section 41 or payroll tax credits. There's tons of literature on the internet if you just search for payroll tax credit. We have to, so a lot of it is just, we reach out to a lot of startups. So we have a go-to-market team of 3, technically 4 if you include customer success. We started the business in 2019, and originally started with, like, we just reached out to first degree connections of founders we knew and just educated them that, hey, did you realize you can get up to $250K back in free money? And you have to toe the line between not sounding like an infomercial and being scammy, and actually showing that this is like a very real thing, incredible thing that you can claim as a startup. We do find that we still have to go out and educate people about this. We're lucky in that there's a lot of, like, human capital management platforms or payroll companies, they blog about this. One of our growth, our growth tactics, we're a partner with over 88 different companies. So everything from venture capital firms to payroll companies to large neobanks like Mercury. We're partnered with all of them, where we, in their products or in their perk platforms, they educate people on, hey, did you know you get up to 250K in free capital? So a lot of it is that. We also do a lot of outbound. We just reach out to a lot of startups on the go-to-market side to educate them. Today we're approaching 250 or 300 customers now on the SMB side who use us to claim their R&D credit. And a lot of those are repeat customers who've used us in tax year 2020, 2021, 2022. So we're slowly, like, the customer base is compounding. This is a very well-known thing. The government provides it as an incentive to companies. And as I mentioned, their goal is to have you create IP. So eventually you pay taxes on that IP in the United States. And so that's how the payroll credit works. On the income, on the larger end of the market, if you go up the segmentation spectrum, on the mid-market or enterprise side, that's when you're starting to claim things like income tax credits, or you're having to do internal use software capitalization. So almost virtually every public technology company has to do this, from Google to Microsoft all the way through Databricks, who's in the or Instacart, who just filed for IPO. They all have to do this. And again, all of this is a manual process with your tax firm or your accounting firm. They all do it on spreadsheets, and there's a lot of room for error. The other unique thing is there's a lot of subjectivity in this process if you do it manually, because they're doing estimations. Whereas the unique thing for us is we do this all by hooking in your Jira or GitHub or your Linear and pulling out the data. And this is the objective data. This is the pull requests and code that engineers are committing. So we are giving you the most accurate result. And you're talking about the IRS and taxes. You want to ensure you don't get audited. You want to have a very defensible strategy. And so we furnish a very, kind of multi-page, very rigorous study in a PDF form that you can then include in your taxes to show, hey, we've done our due diligence. Like, we know John Smith spent 80% of his time on R&D, and you have actual tickets you can point back to in your system of record. And nobody else does this, as far as we know. So this is why you get the peace of mind as well, because again, IRS.
I know, for me, I know what software capitalization is, right? But for the audiences, please explain what software capitalization is, because as you already know, it's a topic of the biggest debate of our century. So
yes. Software capitalization, it's generally more meaningful to, like, later stage companies. I'd say, like, probably what the line that you cross when you start to you have to start capitalizing is when you need audited financials. And this is just a way to kind of, allow you to manage your, your statement of cash flows and balance sheet and all that stuff, where you can, include as an expense how much time engineers and product design are spending on R&D. And this allows you to, kind of essentially, this is sometimes somewhat required in some capacity if you're like a public technology company. But in general, this allows you to, may allow you to trigger GAAP, show that you're GAAP profitable, and manage your financials in a way that's like, kind of compliant with like GAAP standards. But it also allows you to ensure that you're, that you're displaying your financials to investors and the public in a unified way.
Yeah, totally. So you guys have received a Series A funding, and which is amazing. Congratulations on that.
Thank you so much.
And so like if you look at it, right, this is, I mean, if I was looking at it, I would be like, okay, this is probably not a typical venture business, right? But it is a venture business because there's a huge problem that needs to be solved here, and it has to be automated in some form. So how did you convince your investors that, hey, this is a venture business and this is how, we will grow? How do you do that? How did you get your Series A,
Yes. So I will say the Series A predates me. So I think like I wasn't as involved with the Series A as like our founders, Ibrahim and Firas. But I've heard a lot of stories. And again, I've worked for many, many companies at the pre-seed to seed to Series A to Series B. I help companies. I'm an angel investor in 25 plus companies. Many of them are unicorns now, or have been an operator. Generally, the way the process worked is that, we raised a seed early on in the company history. This is mostly from like seed stage investors like A Crew or Uncork Capital, who's like, I think our lead on the seed. I've actually had the pleasure of working with Andy McLaughlin at Uncork Capital at many different companies. He's also been an operator at companies like Huddle. And so he kind of like, just kind of knows, he has a good instincts on how to identify like companies that essentially could grow to large, like, kind of iconic multi-billion-dollar companies one day. And so essentially like at the, like specifically with the Series A, I think you need to show repeatability in your go-to-market motion. You need to show that you're building a moat around your business where it's very defensible, and you could essentially be, I've learned that not every category is winner take all. You don't have even if you believe it, Microsoft has share in search. And obviously, even pre-OpenAI, they had a share in search. Everyone just assumes Google has 100% market share. There's always room for a second, third, fourth player. And so, but your goal is to always take as much market share as possible as you can early on, but also show that there's a high barrier to entry. And so I think Ibrahim and Firas once we raised the seed round, the goal there was to build some sort of MVP or even something that's like a V1 of a product. And also show traction in your business, right? So show that you can acquire customers, show that you can have very high retention and very high net revenue retention, but very low churn, logo churn, growth churn, et cetera. Show that you can gradually increase ACVs of your business. So can you go up market very quickly? Show that you can acquire market share very fast. Show that you can have an efficient acquisition model where the unit economics work out. And so I think like when Ibrahim and Firas started Neo Tax, a lot of money went towards building a really, really strong team and then launching a V1, which is our payroll tax credit product, which I was talking about earlier, which is like under 5 million revenue, under 5 years of revenue history. And so by the time I got here, the company had maybe I'd say probably like 30, 40 customers. And they were doing this with only one account executive, and again, no marketing. And
how do you do that? That's very hard to do.
It's a lot of hustle and grit. It's reaching out to your investors and asking for intros. It's doing webinars, doing podcasts, just grassroots, scrappy stuff, going to events. Just get your name out there. That like there's this company, this is what we do. And I think like explaining in like 1 or 2 sentences what your value prop is. For us, it's very, very easy. It's we help startups get free money back. And startups care a lot about that, especially in this economy, as you know. Because capital comes at a huge premium now. It's much harder to raise funding. And companies want to, if they can get free capital and especially the keyword is non-dilutive capital, in a way that's easy, efficient, they can do, for us, we can help you identify the free capital in 30 minutes or less if you talk to our team. 250K is a lot. That's like one to maybe two full-time engineers, right?
It's a few full-time engineers. It's a lot,
It's
actually.
a lot. 250K is a lot. And next year, that number is going to go up to 500K.
Yep.
And they're thinking, and Congress is actually thinking about expanding it to, instead of 5 years of revenue history, which is like kind of a very short time period, they're going to expand it to potentially 10 or 15 years of window, which will increase the TAM there. And they're also thinking about increasing the revenue line, the threshold from 5 million to 15 million. So it's just going to open up the pool to many, many more companies. Where 500K, we're talking about 4 engineers, right? So again, non-diluted capital, you're already entitled to it if you're doing R&D. You just need to be aware of it. And so, back to the topic on the Series A stuff. We were able to prove that we can build repeatability in our go-to-market motion, and we were able to prove a path where we can build products for the mid-market and for the enterprise where there's continuity. So when you graduate from SMB and you no longer qualify for the payroll credit, you can now use us for your income credit. And then eventually use this for, software capitalization in ASC 350/40. And so we can capture a customer from the full life cycle, from 2 founders in an apartment or in a bedroom, all the way through you're a public company doing $1 billion in ARR, and I have to capitalize internal use software.
And you guys are pretty efficient as well, not that expensive in my opinion. And I feel like for the savings that you're going to have, if you're saving like 250 grand a year on, if you're spending 1 million in expenses, I think that's the fees that you guys are charging is very reasonable, I would say. And I would highly recommend people to go to you.
You said it, not me. So
exactly. I did my analysis, though.
Amazing. Well, I think the most important thing is, obviously cost is important, but the nice thing is we have a very aligned value prop. It's like we don't make any money unless we get you money. So it's very, very easy to sell that versus like, in my experience selling a SaaS product where it's like, hey, replace your your email with a whole nother product that requires a lot of change management. Very, very much more difficult than selling something where it's like, hey, we want to give you free money and we only will take money if we find you money. So thank you so much. And I hope you had a good experience using us.
And I actually spoke to the 2 account executives, and I think they were amazing, and they educated me because I told them I really need some education here. They were just truly amazing, and I was like, I want to hire them.
Please don't, because we spent a lot of time trying to recruit them to Neo Tax. But maybe we'll get into this topic, but building the company, one of the things, just for someone like me who's been part of many, many unicorns, there's like one common denominator across every company that ends up becoming like, it's reaching escape velocity and eventually, becoming an iconic business, is just like the caliber of the team and the culture of the team. And it's one of those things where it's like, I think everyone has this tendency to just like, I need to hire 2 salespeople. I need them tomorrow because we're not hitting our goals. Let me just have a very low bar in my recruiting process and just hire whoever I can that like seems good. Whereas someone like us, we may take a hit on revenue numbers and output, but we will take our time to hire the right people. And, for example, we interviewed for each hire you met, Zoe and Harriet, we probably interviewed like 80 people or 100 people before we found them. We maintained a very, very high bar, and we had a very rigorous interview process through 3 rounds of interviews with a presentation where they had to sell us Neo Tax as an outsider with imperfect information. We put them to the gauntlet because we want to make sure we have the best people, because we want people with very high ceilings who can also grow with the company. And there's a reason investing schedules are 4 years. You want them to stay here for the full 4 years. We don't want them to leave after their 1-year cliff and they leave. But it's a little bit of that, but also internally you need to build a career path thing for everybody. And so they feel like they're growing as a professional and they're learning. And my vision is every single person I ever hire turns into a CRO or VP, graduates eventually to a CRO or VP people or VP of sales one day. If you're go to market, or if you're in recruiting, you eventually become the VP of talent or chief people officer. My goal is to always just train the next generation of leaders, because that's just how you build a great company. And also it's like something just like, it's very rewarding, I think.
I cannot agree with you more. And there's something else that you brought about, which is kind of interesting, where you said you're not doing a SaaS company, right? And that's a really, really big deal because selling SaaS products are becoming tough in the current market with the ad dollars that you have to spend and everything, right? You're like, if you guys save money, we make money, right? So that I think that's like a amazing way to, I would say brand your product or, at least price your product.
Yes. we are very fortunate that there's strong alignment there. So
Yeah. Okay. So obviously, your career is very inspirational, and you've done like many things over the course of your career. So have I, and I've seen like a lot of failures. Some not public, some I mean most of it not public, mostly personal. How
yeah.
do you like handle and I'm sure like when you went about doing all of these little things, people must even your family must have questioned you, maybe not your dad because he was an entrepreneur himself.
Yeah.
So how do you handle adversity and doubt,
Yeah. I mean, it happens all the time, every day. Much like everyone, I think there's a lot of people talking about this right now.
Yeah.
I very much have imposter syndrome. I think especially moving into the COO role of the company. If you look at my background, I've been a revenue leader at many different companies. But having to take on a new role with a very large scope, even beyond revenue, is always very daunting. And so, for me, I would say like, since I've been very young, I've always been my own worst critic. I'm very critical of myself. I'm always thinking about what I'm not doing right. I hold myself to a high standard. Again, as I mentioned earlier, I have an older brother who's very, very successful. And so I'm also a father who's very, very successful. And so I always think about like, would my parents be proud of me, things of that sort. And there's always that voice in your head that's like every day, constantly, I'm having an internal monologue with myself. And so I think a lot of that, that does creep in a lot. And I think the thing, I heard this on a podcast the other day, and I kind of do this, I don't like put pen to paper about this, but just mentally like keeping a scorecard of all your past wins of things you've done. Where it's like, I look back and see, you never know how well you're actually doing. But when other people come and like, I hear you saying, singing my praises, I still feel like I'm like this, Akshata's like lying. I'm not that successful.
Oh, you do have imposter syndrome then.
I do. I very much in spades have imposter syndrome, but I just go and look at the wins. Obviously I have a very, very supportive family unit. My wife, I've been with her for 17 years. We've been together since college. And so like, any single time that I'm like down on myself or feeling like I'm failing, her and I will sit down and, she always uplifts me and tells me like, hey, what about like, you took this company from, nothing to something, or, things of that sort. And so like, she always uplifts me. But I just sit down, you have to think about the wins and realize like, hey, you've done a lot in your career. And so and that like fuels you, like, I can do this again. Also one of the things, you have to have this like optimistic mentality. I've always kind of been a glass half, kind of full type of person. Where I'm like, you know what? You're going to go through the nadirs of your career where like, you're going to hit rock bottom here certain places, but you always bounce back, right? It's like anything. It's like, there's always a rock bottom, but people can always find a way to bounce back. But you have to think in terms of the future, not the present. You can't look backwards, because if you look backwards, things will just fester in your mind. And you'll just think about, it's a negative energy. You just have to think about, our CEO says regret is a wasteful emotion. That always sticks out to me. It very much is. When you put it in perspective, you just have to think about like, how can I improve to get me out of this like trough? So I don't know. It's like, you just have to think about it that way. You just have to be eternally optimistic, and just think about things will get better. And then now that I'm also a father, I don't think about myself. I think about like, how would my daughter feel? And I have to get out of this like funk or negative, kind of cycle in my head for my daughter, because I want her to be proud of me. And so I think that's just one thing that happens when you become a parent. That's another element that like fuels you to do, kind of like to do great things, I think.
Yeah, it's interesting. Regret is a wasteful emotion. Actually, I have to say the number of times where I've looked at things and I've regretted, right? So that's amazing. I'm going to keep that in my mind next time I'm regretting something.
I think about that statement all the time. It's a very elegant way of putting it, but like, I mean, I think it's at the end of the day, you just don't want to like, it's human nature to do this, right? Anything, whether it's your relationships or your relationship, maybe like if you bought something impulsively, anything, you always over time regret. But you have to just realize like, there's nothing you can do by like stressing out about something that you can't change, right? It's happened, and you just need to think forward of, how do I get out of this? Or how do I improve? Or how do I get better tomorrow?
Agreed. So so now we are talking about a business in the tax space. You're dealing with the IRS. So obviously there's risk in the business, right? So how do you kind of approach risk? within this business, and
Yes.
what is like yours and Neo Tax's approach, I would say.
Yeah.
Yeah.
Yeah. So I think like the tricky thing is we are a tech company. And as you know, with any tech company, you have to knock down walls and break down borders to innovate. And the classic Facebook old mantra of move fast and break things.
Yeah.
I think that you have to be very careful about that in the tax space, because again,
Yeah.
you're dealing with like a government entity.
Yeah.
And they are, I don't know where they're at, but there's talk about like hiring, tens of thousands of more IRS agents to audit tax returns for consumer and B2B. And so, for us, our fiduciary obligation and our fiduciary duty obligation is to make sure that our customers never get audited. And we have to be a little bit more conservative in that regard and balance moving fast and going 200 miles per hour on the innovation side with also making sure that we're staying compliant and we're making sure our customers stay compliant. So I actually take I approach this with a very conservative lens, which is with the engineering team, with the product team, we sit down and always think about how do we make sure we're being very diligent and rigorous with all the things all the value and all the outputs that we're providing to customers. The one thing that works really well is we have a good check and balance across our team and from a personnel perspective. So we also have a third founder who was an ex-IRS agent who used to audit tax returns for the IRS. And so he obviously helped us mold our software to make sure it already has bias towards a conservative, conservative, parsing of your data, for example. Everything is mapped into being kind of having a high degree of scrutiny on the data. That's one piece. Like the product is actually opinionated. It already has checks and balances internally to make sure that we know what's qualified research expenses, what's qualified research activities, and those fringe things that maybe even an accountant might not know. We know because this gentleman used to audit tax returns for the IRS, so he knows all what stuff will trigger an audit.
He's a good friend to have.
He's a very, very good friend to have. He's now an advisor with the company. He's gone back into running his own tax firm, but he does help us a lot, giving us advice, making sure that we have a high barrier of scrutiny. And then the other thing is we've invested in hiring a team of CPAs in-house. And we have this wonderful woman, Kelly, who used to work on R&D credits for KPMG at a Big Four. So she internally leads our compliance efforts. She reviews every single submission. And because she has so much experience doing this, she instinctively knows, she knows it's second nature. This qualifies, this doesn't qualify. This is oh, you have multiple entities and you want to claim this. No, don't do that because this will get audited. So and when you have Big Four experience working with, SMB all the way to enterprise, it's you can do this stuff, this is very second nature. It's very instinctual. And so we have a lot of checks and balances in our process. We record every call, we review calls. She meets with our ex-founder, ex-IRS agent regularly to make sure that we're always ahead of the curve of things that may impact our customers. And then for me and with our founders, we always err on the side of caution to make sure, again, our one of our values internally is no audits. And today we've done returns for people, or we've done R&D credits 3 years running now, 3-4 years running. And we have yet to have an audit. Whereas, we've heard through the grapevine, we've had a couple companies that I call switchers, where they've gone with a competitor or their accounting firm to us. And the impetus for that is that they got audited. And some of these are if you believe it, these are very reputable companies that did their R&D credit that you would know, some multi-billion-dollar companies. And so they're you know what, we want someone who has strong expertise and has a good track record here. So that's another area where it's that's the utmost importance for us is compliance and ensuring that our customers are audit defensible and making sure that we don't have any blemishes on our track record, because it's all about reputation in this business, especially when you're dealing with the IRS. Or if you're a public company doing your financials, you don't have to restate your 10K or 8Ks.
Exactly.
Because you categorize something that wasn't R&D, for example.
Yeah, exactly. So, tell me, how has, if there's a mentor or a book that has significantly influenced you? And you said your brother, but it was there some and your father, right? But outside your family, who or a book, which is deeply like kind of influenced you. And for most people, it's first their family, right, who kind of influence you. I've had a whole bunch of my family members who've influenced me, but
Yeah.
was there somebody external, or was a book that you said, okay, yeah, this is amazing?
Yes. Yeah. So I mean, I'd say like this is atypical. You don't hear this that often.
Yeah.
I do read a lot of books. You can see like one of my books I always try to read every year is High Output Management by Andy Grove,
Oh,
which
okay.
is like one of the most popular books around just kind of management frameworks and things of that sort.
Yeah.
There's also many other books. Like I love reading Behind the Cloud by Mark Benioff.
Yeah.
Because I just love to hear like the history. I was working in tech at the time, but like used to love to hear the history lesson. I'm geeky about like SaaS companies, how they formed and like their growth tactic early on. And I think even Salesforce did a lot of like very guerrilla marketing, guerrilla sales type like scrappy things to grow the company early on when they were going up against Oracle and SAP and things of that sort. But for me, I tell you, the things I do is I spend a bunch of time with my brother. Because he's a serial entrepreneur. He's actually started a bunch of companies.
Wow.
And
I need to interview your brother now. I need to know who he is and I need to interview him.
Yeah, I think after you interview him, you'll probably bury my interview because you're like, oh, his is so much better than yours. But then that'll fuel my imposter syndrome even more, I think, maybe.
We value our guests equally. So
Okay.
everybody is different and unique. We are all needed in this world.
I appreciate that. Yeah, no, definitely. He's very good. But he's like very opposite to me. He's a product guy. He's a builder. He's an engineer, whereas I'm like business, sales, revenue type person. So everyone always tells us we start a company together, but the timing has never lined up. My brother's just been a mentor to me throughout. Whether I'm thinking about taking a new job or whether, the viability of the company. Again, we work in tech and he's someone who's just always on the bleeding edge of knowing like all the new stuff that is being built or that's coming out. He's in the process of building a company right now that's like, very bleeding edge around, audio, real-time audio video API for developers. That's low latency. But I can always sanity check like you want to make sure you're working with the company that has the best tech. And that the proxy for that is the best engineers, the best software, the how difficult is it to replicate the technology? That's like one of the most important things for me. Obviously, like how high, like the other variable is how high quality is the founding team, things of that sort. And so even before I join a company, I send him a text. I'm like, hey, can we hop on the phone? Check out this company. Tell me what you think. And we've done that over the years, whether I'm doing an investment or whether I'm like thinking about joining a company as an operator. He always just gives me very, very good advice. And that's what big brothers do. He even helped me like when I was studying for my SATs. So we've been doing this even before I went into my career. He would tutor me in like math and science and things of that sort. Even in high school and college. That's what big brothers are for. Even though we're in competition, he's been a huge inspiration. And just even outside of that, like my father and then just even peers. There's been, honestly, I don't just look at like one person. I try to keep a bench of a lot of people I can bounce ideas off. In different areas. For example, there's a lot of areas within business I don't know about, or maybe I have a cursory understanding, but I'm not an expert. And so there's just some great people I know out there who are like, the best I know in like SEO, or they're the best I know in like paid acquisition, the best I know in like people operations and compliance and payroll. And so I just like try to like have a network of just people who are way better than me in these certain areas, because there's nobody who's like an expert in everything. And so like I can lean on them if I want to ask them a question. And it's like, so that these days it's a lot of like, I just crowdsource the whole process or democratize that process because a bunch of people that I trust who are best in their field. So hopefully that answers your question.
I think that's very interesting that you said like collecting a people of best people, right? And I try to do that as well. Like I have my, best for like you pointed out, SEO, best for this, best for that. Because otherwise you cannot function. Like you alone doing everything, you cannot function. You need to like identify those people in your life. So this is so you obviously had like a diversity in your career. You invested and you try to start companies, been in companies which are all in growth mode, right? So you have seen a lot of entrepreneurs in your life. You've seen Aaron Levine when nobody knew who he was, right?
Yeah.
So So tell me, but that's an amazing story, by the way. Like seeing your meeting Aaron Levine on Craigslist. So,
Yeah.
so tell me, like, what do you look for in entrepreneurs, and what advice would you give to anybody who's like coming in and wants to be an entrepreneur, or even want to work for like tech companies, smaller tech companies? What advice would you give?
Yeah. This is always a tricky one because I get this question. A lot of people ask me this question because, like, I have like whether it's operator or investor, I have 6 unicorns now already.
Yeah.
And originally it almost became an obsession with perfection, where it's like my first job was Box, my second job was Dropbox, which is
Yeah.
both public. My third job is going to call Front, which is worth 1.7 billion.
Yeah.
So you want to keep that. You want to be batting perfect record.
Yeah.
Uh,
Can you like pass that record to me? You know what I mean? I need that.
I mean, honestly, a lot of it is just kind of a little bit of luck. But I guess like when I look at the commonalities,
Yeah.
I'd say that like I think like it's turned into a sixth sense now. I think it's like a little bit of like you just kind of get a sense of like, is this person different than the herd? Yes. And do they spike in some dimension? And so, like, for example, like Aaron Levy, I think when I met him, I was just kind of like, have you ever heard a podcast by him or listened to him he's on MSNBC or CNBC all the time. It's crazy to see now, right? These days now, having been someone who like used to work with him when he lived in the office. Crazy. He's just a student of the industry, a student of tech, very charismatic, just obsessed with like his category. I don't know, like, more so than a lot of other people. And you just never see that like ruthless, like almost like irrational obsession. But also very, very good about like getting along. Like he can relate to a lot of different types of personality types. I think that was his superpower. Whereas like Drew Houston and Arash from Dropbox, they were just like world class engineers. Like when I heard about the way I heard about Dropbox through my brother, who's in the same batch in Y Combinator. And my brother told me, hey, these guys from MIT who are starting this company, they are like the best engineers in our batch. And I've heard they're like some of the best engineers at MIT. So like very, very deep technologists. Or Mathilde at Front. Like one of the things that was amazing about her is she was just super scrappy and she was very customer facing. And you didn't see that much from like early stage startup founders. Like a lot of startup founders will go and like be like, I'm going to go hire someone like Cailen or a sales leader to solve the sales stuff because I just want to work on product. She was out there like meeting with customers, getting on jets to fly across the country to go meet with like prospects. She sold our first, like, I don't know, 100 customers. And you can see that very rarely. So it's like, and then once you meet enough of these people, you just kind of get this like, sixth sense. You develop a sixth sense of like, this person has the it factor or they don't. I think it's like hustle, unique personality characteristics that you just don't see every single day. And just like have a good, and then obviously that I primarily look for the founder. I join companies based on the founders, not even what they do, but secondary to some of the stuff we talked about earlier, which is like, is this company have a moat? Is there a high like barrier to entry? Like, is the market, is the TAM large enough? Is there a large market here? Sometimes you even see, if you look at the Uber seed or Series A pitch deck, they thought their market was very, very small, but markets are much larger than we always think, right? Like than we imagine. Sometimes you create a market that didn't exist and it's a multi-billion-dollar market. So that's sometimes I don't look at the TAM slide very often. But do I just think that is this something that customers want? And have they built enough, like some momentum in the business where like customers are buying this with no sales? Which I think today people call product-led growth, right? But it's like, can this sell? Like, why does, I don't know if you're you have a sweet tooth, but like, why do people buy Twix bars, right? If you've read a Twix bar, right? It's like,
I don't like Twix at all. I don't know why.
I use a bad analogy here. Like, I don't know what's your favorite candy bar, Snickers or I don't know.
I don't. I don't have a sweet tooth. Probably that is the reason.
Okay, that's a bad analogy. It's like, I guess the example is like, maybe cars. Like, why do people buy Toyota Camrys? Because they work and they're reliable and they're good on gas and like they go 300,000 miles, right? You don't have to
even go a million if you want to. Wanted to go.
Yes. And so like you just don't have to spend like the product sells itself. And so I look for that a little bit. It's like, are you just building a great product? Because that is the most important thing. Do you have to convince people to buy this product, or do they just buy it because they You match need with and the need in the market with what you're building and the problem that that needs to be solved.
Yeah, totally hear you. And I love the way you said, like, most of these people are obsessed. Like for what I'm doing, I'm like always obsessed. And I see this is a common trait among the founders that I meet. They're all obsessed about something. Like they want, it's either their product. And as you mentioned, this woman who went in, basically didn't know sales, but still she was in sales, and she was like going and reaching out to people and selling things, kind of a thing, right? So, and it's because it's an obsession with the company and it's obsession with what you do.
Yes.
Right. Yeah. And you just cannot get it out of your like brains, kind of a thing. So anyways, this was amazing. I really had fun chatting with you. And Cailen, next time when you get your 6 cents, please call me up and let me know, actually, I've got a 6 cents here. You want to invest in this. So please let me know. This was, and thank you for educating my viewers on what the R&D tax credit is. This was really, really helpful. And I'm glad we did this. So thank you so much.
Awesome. Likewise, Akshata, thank you so much for giving us a platform to like even spread the word about this. I really, really appreciate that.
Yeah.
And it's been just fun being on. I think you asked some great questions that are, very, very thought provoking. So I appreciate you giving me an opportunity to share my story.
The pleasure was all mine, I have to say.
Awesome.
Anyways, thank you.
All right.